Okay, so this is just a quick analysis video. I'm looking at GJ. GJ is actually my favorite currency pair to trade due to its simple movements and large moves. Okay, so what you basically have here on the 30-minute chart is obviously a clearly uptrend because this market is moving up, making higher lows, and this is the most important higher low because there are two things happening here. First of all, we are coming back for a retest of this clearly important line where we've seen a lot of rejections as the market was going up using this trend line. Once breached, we have a good retest, and then at this point here, not only a retest of this area, but also a good test of the trend line. So clearly a bullish market, and what we want to do is we want to be buying, and that's the most important thing in the market because there are two things you can do. You can either buy or sell, and to basically put the odds in your favor, you want to make sure that you are collecting as many factors or very stable factors to form a good bias as to eliminate one side of the coin. So you want to know, okay, GJ, I'm only buying today. Okay, NJ, I'm only buying today. Or EU, I'm only selling today. That's the first step. Okay, so I know I want to be buying now. One way I can buy this market is, first of all, I've included, there's a nice counter trend line here with all these points that were being tested as the market was going down to this area here. Now, what can happen is if this market breaks and closes bullish above this area, I can execute buy positions, have my stop loss just below this, maybe like just around here. But that's not the focus. The stop loss is not the focus right now. So, but a breach of this counter trend line can allow us to execute bullish positions or buy positions in this market. But I want to go back to something else. There are many ways to trade. So that's one way of taking advantage of this market. But my favorite is basically because it's all about factors and trying to put as many odds in your favor as you can. Now, what can happen is I execute my buys here. What happens if the market, okay, just after my execution, the market struggles to break this high and starts to fall? So that's obviously unfavorable for me or my positions. Or if the market goes a bit up, a few pips, struggles to break this high, or most importantly, the market goes up, forms an equal high here, fails to break that high, creates a double top, and then starts another move to the downside. This is why the easiest way, I want to use the eraser. The easiest way to take advantage of such positions is to basically apply patience. Wait for the market to convince you that, okay, yeah, bulls are really powerful here and it's safe to join them. And that's only when the market comes to this area. So first of all, bulls will tell you, okay, we are still in the market, we are still powerful by being able to breach this counter trend line, go all the way to this high, which was last tested here. And not only that, but once it gets to that high, I want to see the market breaking the high as it previously failed to actually go higher here. So once it starts closing above this high on my smaller time frames, that's easy execution, buys to the upside, and then I'm going to hide my stop loss below this area because I'm confident that, okay, bulls are in this market and they're still powerful by breaking this previous high. So that's how most of my trades actually take place. Of course, there's much more that I put into consideration before I zoom in like this onto the 30-minute charts. I mean, there's multi-time frame analysis and all that, but that's just a simple view of how we can actually take advantage of the market on smaller time frames once we have established a good bias.